Hi, folks. Dan Bird here on Sunday, September 1st. September has begun. Mr. Zuber is still out of the country, I believe, so I'm doing this as a solo session today. Hope everyone is having a great week. We have a lot to cover today, especially thanks so much for all the people that sent in stock ticker symbols that they would like me to take a look at the charts, and I'd be happy to do that. One thing that I want to start off by saying is I am not an investment advisor or a financial advisor. So nothing that I do here is meant to suggest or recommend any stock purchase. I do it strictly for educational purposes. And that's what today will be about as well. When I go through the different stock symbols, it's to point out how I look at the charts and hopefully teach you some things about charts themselves. But it's not a recommendation to buy. So I'll make sure I want to say that. I'm going to start off, though, first talking about the market in general and September in particular. So let me share my screen. And there are quite a few stock symbols sent, so I'm going to probably go through those as quickly as I can, but I want to get this part done first. So here's my website. If you're interested, breakpointtrading.net. There's a free newsletter that comes out every Saturday usually. And if you just want to check it out, at the bottom, you can sign up to be reminded of the newsletter, $0, doesn't ask for a credit card. We don't share emails. If you want to just check out the rest of the content that I'll be showing you today, you can sign up for this monthly subscription, but there's a 7-day free trial as part of that. So if you don't think it's something that is worthwhile for you, after the 7 days, just cancel the subscription and your credit card won't be charged. I look at this, or I call this a toolbox for traders or investors. So it's a set of tools to look at to get a sense for what the market's doing, for what individual stocks are doing, and to help you really to do the research before you actually start trading or investing. So if you want to check that out, you can use a 7-day free trial, or the $99 per year gives you a lot of other things as well, in particular the risk management calculator, the options page, some of those things that are also included with the annual membership. And I do a Zoom call with all the members once a month. So those are for subscribers. So that probably will be sometime in the third week of September this time. All right, so let me first start by talking about September. I've shown this before. So this is historically, from a seasonality perspective, what September looks like. And all the charts I show today are from stockcharts.com. A lot of the things that you can do and a lot of things on the website really require a stock charts membership, but not everything. You can look at charts, certainly, that I have out there. But to do a lot of the things that I'm showing, like this right here, does require a stock charts membership, which I encourage for anybody that's serious about technical analysis. So here's what September looks like. This goes back 10 years. You can see September right here is the worst month of the year. This is all of these this is a relative chart starting all of these at 0. So all of these years, if they were to start at the same point at 0%, kind of shows you what they've done. And the highlighted area is the September to October period, which seasonally and historically is a weak period. The market often goes down in September all the way to about the third week of October. And then that's when the rally begins for the end of the year. The best months of the year are from mid-October until mid-January. So you can see here, November and December in particular, usually are good months. But one of the reasons I'm showing this, and I showed it last week as well, is to highlight the point that it doesn't mean that this happens every September. Yes, over here, September is the worst of all the years over a 10-year period. However, and 33% of those years were up years. Only 33%, but still out of 10 years, that still means 3 years were up years. So that doesn't mean this September is going to follow that pattern. And I am going to show you some things that make me believe it might actually be a fairly good September. If not sideways, we might actually get an up September this time. But there's no way to tell the market. There's lots of things that happen that cause September to sell off. In particular, traders come back from vacation after Labor Day, starting tomorrow or Tuesday. And usually that's when they may start selling. Also, a lot of the buybacks, company buybacks, stock buybacks will end before the quiet period, before the end of the quarter. They have to go through a quiet period. So those are going to end next week sometime. So the buybacks will not be helping the market. And mutual funds too might be rebalancing at the end of the quarter. So those are some of the reasons why it often goes down. But there are some catalysts this time that might actually help it to go up. So that's what I really want to talk about. So let's take a look at that. So some of those catalysts, if I go back to the website, on the charts page, the first one I want to talk about that's coming up next week is the jobs number. So the Fed has made it pretty clear that they're going to cut in September. They believe that inflation is under control, and I think they probably are right. So they're going to pivot to jobs, and jobs has been concerning lately, last few months, but what's it going to do Friday? So the jobs number comes out on Friday. First, I want to look at initial unemployment claims. So all of these charts that you see right here are on the charts page on the website. And these are the recession watch components up here. So first, I want to look at unemployment claims. So these are people that are filing for unemployment. And the first thing you'll notice is that it has been ticking up right through here from April, basically April to July. This has been rising. Now, the way this chart is set up is the green is a 52-week moving average, and the red is a 13-week, which represents a quarter moving average. So if the red is below the green, that means it's been going down. Claims have been going down or sideways. When it goes above the green, that means claims are starting to rise. So during this period, claims went up. Actually, let me turn on my handy dandy little cursor here. So in through this period, claims were going up, and then they started to fall off again. Right here in, this is a year ago, August last year. And then beginning of this year, in February, they hit a low peak for the year, and then they started to tick up again. And back in July, when the market was selling off in July, they ticked up again. However, look at what's happened in the last 4 weeks. And this is going to contribute to the jobs number that's coming up next Friday, because the jobs number is a monthly occurrence. So you can see 3 of these are green, which means they were lower than the previous week. The one that's red is still lower than the peak right there. So in general, the last 4 weeks, claims have been lower. Now you can see here the unemployment rate has been ticking up pretty steadily. 1, 2, 3, 4 months in a row, it has been going up. And the Fed rate, higher for longer, has been steady right up here. So in September, it will be basically 12 months. Starting last August, the Fed has kept rates where they are at 5.33%. But the important one for Friday is the unemployment rate. I believe that because of this, that the unemployment rate is going to tick down a little bit. It's actually forecasted, it was 4.3 last month. It's forecasted to come in at 4.2, which is on the left side over here. 4.2, so it will tick down a little bit. Could tick down even more based on this up here, but I certainly think it's going to be lower. So that is, the Fed will like that unemployment is not starting to really go parabolic. So that is a good sign. So that's one positive catalyst. The second one, here's the unemployment rate itself, and you can kind of see right there that it's starting to move up. The acceleration, the rate of change is starting to go up. However, this red line across here represents 4.5%. And you can see in general, that's pretty much normal. 4.5 is normally, unemployment can be above that, below it sometimes. but consider 4.5 is basically normal. Now, according to the SOM rule, which I have up here too, in September, the SOM rule target will be 4.2. The last reading was 4.3. If this one coming out next Friday is also 4.2, it will be exactly the SOM rule. If it comes out at 4.1, it will be below it. All of those things are positive. So that's something that the Fed will like. Second catalyst that's coming shortly after that, the week after that, is the CPI, or the inflation. So let's take a look at what that might do in the second week of September. Down here, I have CPI, headline CPI, PPI, PCE charts down here. So on headline CPI, what you'll notice, and this is the base effect. This is the 12-month base effect. And in the newsletter that I put out this week, I actually put a link to explain what the base effect means. But essentially, it's a 12-month window that when a new number is reported for consumer price index or inflation, then the one 12 months ago drops off. And if the one 12 months ago is a pretty large gap, in other words, a large increase, and the one that's being added is a smaller increase, then the effect is that inflation will look like it's coming down. The inflation rate, I should say. So here's the one that's going to happen next week, or the week after next. It's a big one. So this large one right here is going to drop off in September 14th. That is going to make this look like it's coming down. Now, the last one went from 3.0 to 2.9. It was forecasted at 2.9, so it came in right as forecast. I haven't seen a forecast yet, and that might come out next week sometime, but I would not be surprised to see the forecast at 2.7. In fact, if the forecast comes in at 2.8, I think the number will actually come in at 2.7 for this reason, because of that right there. The other thing we can look at is commodities, see how they're doing. So if we look at the commodities chart, they've all started to tick back up again. So the next report that will be this period for August, that will be reported in September. That period right there, commodities have ticked up, other than gas and oil. Gas has continued to fall off a cliff. Oil is actually a little bit lower, so those two are key components. But the other ones have started to tick up a little bit. So while that's not going to, I don't think that's going to hurt the CPI number. I think gas and oil are really the key ones that will benefit it. That should help as well. So those things combined, I believe we're going to get a pretty good inflation number the week after next. And then, of course, shortly after that, the next week, September 18th, is when the Fed will have their decision and will likely cut rates. So when the Fed cuts rates in September, the market will like that as well. So all of these things are going to contribute to what the market's doing. We get a decent or tamer unemployment number, the market will like it next Friday. If we get a better CPI number, the market will like that the week after. And then the Fed cuts rates, probably a quarter point, then the market will like that as well. So we have three catalysts in September that will be battling against the normal historical seasonality of September. And I think they probably will win out. At a minimum, the market's not going to crash like it normally, not crash, but go down significantly like it usually does and be the worst month of the year. This might be one of the years where it's not the worst month. That doesn't mean that's going to happen. This is just my opinion based on the data. So I just wanted to throw that out there and let people know what I'm seeing and give you an idea of perhaps what might happen over the month of September and what it might mean for the market. If we go back to the homepage and look at the S&P chart, we can see that Friday was a good day for the S&P. It's had a really good run right here. I drew in this potential inverse head and shoulders, but that no longer is the case because we did not make a right shoulder. So I'll delete that. So we did not make a right shoulder, but what we did instead is made a flag pattern. So if you think of this as the flagpole and this is the flag itself, that is normally a continuation pattern. So using consolidation theory, whenever a market or a stock consolidates sideways after a bullish run, it usually will continue higher for the same distance. So this is roughly 5,200 down here. This is roughly 5,600 up here. So that's 400 points. So that takes us to 6,000. So that might be the run to the end of the year, 6,000. Again, not saying that it will be, just saying that this is one of the patterns that everybody's watching. And Friday actually broke out a little bit. So what happens on Tuesday is going to be very important to see whether that continues to break out. If it does, and it gets above this high from back there, then I think we will be off and running. And that could be the unemployment report coming next Friday. That might be the catalyst that does it. And then CPI after that. So keep a watch on that. Things actually are looking fairly positive, I think. Much more positive than they normally do at this point in the year. Okay, I hope that was helpful. Let me jump over to take a look at the stock symbols that all of you gave me. Put them all in a chart list that I call Zuber, just because it puts it at the end of my list. It makes it easy to find. So these are all the symbols that folks gave me both the week before and on Wednesday. I'm going to try to go through them as quickly as I can. Let me edit this because there's a duplicate right there. Get rid of that one. I think all the rest of them look pretty good. All right, so I'm going to go through these alphabetically, and I will try to get through all of them. The first thing that I want to do, so AMD is number one. So let's bring that up. First thing that I want to do is answer a question that somebody had about these candles. And these, and what he said was, I understand the regular candles. There's the regular candles. So we're looking at AMD right now. Understand those candles and what they mean. They're basically shows you the open, the close, and the trading range that it was in for that day. So if we look at one like this, it opened the bottom of the white part. It traded all the way up to the top of the wick, traded all the way down to the bottom of the wick, and then at the end of the day, closed at the top of the white part. So that's an open candle. The red ones are closed candles. Same idea, but in this case, it opened at the top and closed at the bottom. You can think of that as a window shade. So if it's closed, the window shade's closed, that means it ended lower than it began. If the window shade is open, that means it ended higher than it began that day. So those are regular candles. But what the heck do these candles mean? So this is called the Elder Impulse bars. And if you go to stock charts, and you don't need a subscription even, I don't believe, to do this, but you can go to Chart School and just type in Elder Impulse System. And this was created by Alexander Elder, who has created a number of other indicators. And essentially, it combines both trend and momentum into one bar. So it tries to capture both the trend and the momentum in just one bar. It identifies inflection points where a trend speeds up or slows down. Uses a 13-day exponential moving average. So that's important, 13-day exponential moving average. It also uses a MACD histogram, moving average convergence divergence. And it shows you what the calculation is right there. But essentially, the way to look at this is just think of it as trying to identify both the trend and the momentum. So you can use it for entries and exits. I'll show you how I do that. This explains how to use it with sharp charts. You can see the colors, red, blue, and green. So the short answer for this is that it looks at whether the stock is moving up or down. So that's the trend. And it looks for the momentum, which uses the MACD. So if the MACD histogram, and let's see if I can show you a histogram. Right there is a histogram. So if the histogram is moving higher and the stock is moving higher, both of those things are true, then it gets a green bar. If both the histogram and the stock are moving lower, like right in this period, then it gets a red bar. If one of those two are different, if one's going higher and one's going lower, then it gets a blue bar, or think of that as neutral. So red is a down bar, green is an up bar, and blue is a neutral bar, taking into consideration that this is both trend and momentum. So that's basically what those are telling you. So the way I like to use them, and I do this on my trend model. As a matter of fact, AMD is one of my trend model stocks, so we can look at it there. It's in the Magnificent Seven. It's not actually technically a Magnificent Seven, but it's in that group, Magnificent Seven and Friends. So here's the AMD chart, and you can see that it uses the impulse models. So when these are green, then it's moving up. When it's blue, it is neutral. That often happens whenever there is a change of trend. And then when it turns red, then both of those things are true. Both the price is going down and the momentum. Trend and momentum are both going down. So the way I like to use this is if we're in a pretty good uptrend, and then we get to a blue or a neutral, that means I want to start watching that. Doesn't mean it's going to go down. It means it might be just going sideways and then it's going to go up. But then when it gives a red bar, that is the confirmation that it is actually going down. And if you do that in conjunction with other things like the MACD up here going below zero, that confirms a downtrend. This red one confirms a downtrend. On the trend model, with the short-term signal right there is the pink line going below the blue. That confirms the downtrend, and down here also confirms it. So all these things are confirming. So you never use just one particular indicator. You want to confirm it against everything else. So remember that when I start showing these other charts, that's what I'm looking at. So with AMD, big thing I see here is it actually did start to confirm an uptrend. It had a short-term up right there, but it couldn't get through the 65-day moving average right there. And if I look at it on this one here, this is the 50-day, it couldn't get through that either. So that is definitely negative for AMD. Want to watch that. Some of the other things that I like to look at, and I'm gonna go through these very quickly on the other charts. First is the long-term view. So if I want to see a 3-year weekly, this helps me identify where the major support and resistance areas are. So I can see that there's major support up here, and there's support right here. I mean, resistance right there. So I know that that's going to be an area where these buyers will probably be selling. So I want to keep that in mind. And I want to see that on a long-term chart to see where there's major resistance levels are. So that's how I use the long-term. I always like to zoom out to take a look at what things look like on a long-term basis. The other one that I always like to look at is relative strength. So what this tells me is the two most important ones are the blue and the red. The blue shows what this particular stock, AMD in this case, how it's doing versus its peers, how it's doing versus other stocks in the semiconductor industry group. First thing to look at is whether or not it's above or below zero. If it's below zero, then it is underperforming its peers. And if it's below its 50-day moving average, that means it's continuing or accelerating in the underperformance of its peers because it can't even get above its own moving average line. But the important one is the 0% line. If it's below that, it is underperforming all of the other stocks in the semiconductor group. The second one, the red one, shows what AMD is doing versus the S&P. Again, the zero line means it's underperforming the S&P. Under its 50-day moving average means that it is accelerating to the downside of underperformance. That's how these relative charts work. The gray one, I don't look at the next three as so important, but I do look at them occasionally. So the gray one is the sector versus the S&P. So the technology sector, how is it performing versus the S&P? It's underperforming the S&P. The next one is the industry versus its own sector. So semiconductors versus the technology sector. And what you can see here is semiconductors have been significantly outperforming the technology sector group. That's good. That's a very positive thing. And it is moving right along its moving average. So it's keeping up right there. And the last one is, how is the industry group, how are semiconductors performing versus the S&P? And again, they are outperforming by 25% roughly, actually 24.84%, and they're above zero, so that's good. The best thing for any of these is to see all 5 of these moving up from lower left to upper right. So we'll look at those very quickly on the other stocks. Now that you understand what they are, you'll be able to see right away whether the stock looks good or not. So the biggest thing with AMD is it's below all of its moving average lines. It's underperforming. This is the accumulation distribution, so it is being distributed. So Wall Street is not adding to this particular one. So AMD, from my perspective, doesn't look that great. A couple of others that I might look at quickly too. The moving average squeeze kind of shows you all the moving averages. You can see that we have a lower high, and then another lower high. We have a lower low and another lower low. So that's the definition of a downtrend. But this just kind of gives you a visual picture of what the overall trend looks like. This is basically the squeeze that John Carter talks about. Anytime you see this lime green color right here, that means it's in a squeeze. So that typically means that it's going sideways and it's getting ready to break out. So that's the squeeze right there. There was a squeeze right here as well, and it broke out to the upside. This one broke to the upside. And right now it might be starting to form another squeeze right here. We don't know which way it's going to go, but usually that's like a loaded spring. And then finally, the momentum chandelier exit. This is one that most people don't look at or may not even know about, but Stock Charts offers this. The green one is the exit for a long position. So you can think of that as a potential place to put a stop. So if you're in a position on the long side, then you might put your stop down here at 140. That's where that green one is. The red one, on the other hand, is an exit for a short position. Now remember, to get out of a short position, you buy the stock. So that means if you are short AMD through this whole period, then you want to put your stops above this red line. So up here, that means it is no longer going down, it's starting to move up. What I like to see is the price above both of them. That is the best scenario. In this case, AMD is above both of them. So that's positive. So maybe it will hang in there and actually start to curve up right here, start to make some headway to the upside. We'll see. But those are the charts and how I use them. So with that in mind, let's go through each of these. So Arista Networks. This is the default chart. You can see that it has a green bar on Friday. All of the momentum indicators are starting to curl up. That's good. So all these things are positive. It might be right now, might be a great time to add or get in. It's just bouncing off of both the 50-day and the 21-day. So all the moving averages are kind of coming together. You see that on the moving average squeeze where they're all coming together right here. So it's starting to bounce off of that. So that one actually might be fairly positive. If we look at the relative strength, it's above zero on both its peers and the S&P. So it's outperforming both of those. The sector isn't looking as good, but everything else looks very good. So that looks good too. So Arista Networks, and here's accumulation distribution. Just starting, it actually has pulled back, but it's just starting to tick higher now. And that usually will pull back if you get a pullback in the stock. So this one looks like it actually is a healthy stock that's pulling back. Earnings is on 10/28, and the sector and the group is technology, telecom equipment. That's where Arista Networks is. So 10/28, so it's well before earnings. That's good. All right, next one, ARM Holdings, technology semiconductors is where it is. Earnings is on November 6th. It already had earnings on July 31st, about a month ago. July 31st was right here. So they may have missed earnings or had bad guidance. But since then, it made a bottom. Since then, it's starting to recover. It has a green bar right there. If I look at these on the regular, I just like that every once in a while I look at it on the regular candles too. And what I see is a shooting star candle right there, which is a reversal candle. So this one might actually start to reverse down if the market reverses down next week. But if we look at the other components, relative strength, it's above zero, but it's right below its own relative strength, the moving average line. It's above zero for the S&P, but also underperforming lately. So this just looks average. It bounced off the 200-day, which is very positive, but it has not yet made it through the 50-day right there. So that's what I would wait for. Wait for it to go through the 50, which is at about 126, 136 right there. So probably around 140. If it can break out of that, then it probably will head back to 180. What's next? Becton Dickinson looks great. Look at that. Becton Dickinson has had a nice run. It's above its 200. It's above its 50. So it's above all of its moving average lines. If we look at the moving average squeeze right here, you can see it's just gone sideways for a long time. This is all the way back to 23. It's just moved sideways. It has serious resistance. If we look at a 3-year weekly, it's got serious resistance right along here at about 250, 245. So it needs to get through that in order to break out all of this resistance right here. So that's what I would be looking for, something above 245 or 250. It may run back up here to 275 when that happens. But all of the momentum indicators are starting to move higher, which is positive. If we look at it on a relative strength basis, it's outperforming. It's not outperforming its peers because it's below zero, but it's beginning to outperform its moving average line. It's also below the S&P. So it's underperforming both its peers and the S&P right now. And there's what the impulse indicators look like. So it's sitting right at resistance. It needs to break out of this area right here. And it looks like it may try to do that because the momentum indicators are starting to move up. So keep an eye on that. If it breaks out above 244, then it probably will run a little bit higher. Okay, next is Chipotle. Chipotle had a split, 10-for-1 split back in here somewhere. And it's just sold off ever since then, went below the 200-day moving average, which is not a good sign. Actually had put in a double bottom right here, which is positive. So starting to move back up. You can see the momentum indicators actually crossed over right here and actually went above zero right here. It's right at the 50-day moving average. So it needs to get through that to confirm the rally. And it looks like it may actually do that. I put this one on here, which shows you how they're doing versus their peers. And this is probably the only one I'll look at on the rest of them. So it's underperforming its peers right now. It is still below zero. So still underperforming its peers. That's not a good sign. It actually started to underperform its moving average right back here when it started to trend down. You can see where the 5 crossed the 21 right there with a red bar. That would have been the time to get out for sure. You might have got out on this big, huge red bar. In fact, if I look at it on the regular candles, there's a huge red bar right there. So you might have got out even though it didn't go below the 21, but definitely would get out on that one because the 5 went below the 21 right there, and it just continued lower from there. So what we're looking for now is for it to get above this 50-day moving average to see if it can confirm a move higher. But the momentum indicator, it's above both the long and the short exits, so that's a good sign as well. Let's look at DraftKings. Used to be one of my favorites, but then it got up to about 40, 45 and just stopped going up. So right now it is not a good look for DraftKings. It's in a downtrend. You can see that the moving average here went below 0 back here in April, went above it briefly and then went back below it, went above the 50 briefly, went back below it, tried to do it again right here. Didn't succeed. It basically was, in fact, if you look at this, even though it's a green candle right there, if I look at it on the regular candles, you'll see that it's a shooting star. That shooting star is a reversal candle. I have learned from experience that anytime I see that with one of my stocks, I ask no questions and I just sell. I get out of it as soon as I see that shooting star candle, and this is a great example why. It's gone down ever since then. The other thing is it can't get above its 50 right there. Try it again right there. Try it again right there. This is just in a consistent downtrend. So I do not like the look of DraftKings right now. Let's look at the longer view, the weekly, 3-year weekly. So it had a nice run for most of 23, got above its 200, made it up here to about almost 50. Looks like it touched 50. And then since then, it just has not been able to rally from that point. And it's sitting right at very important moving averages, both the 21 and the 50. If it can't get through that, and it looks like it got rejected, actually. This is a weekly view, remember. So that bar is 1 full week. It looks like it's being rejected again and sitting right above its 200-day. So that's not a good look. There you can clearly see the trend. If you look at all the moving averages together, you can clearly see the downtrend for DraftKings. Genius Sports Limited has had a nice run. That looks like a pretty strong stock. The next earnings is November 13th, so August 6th was the last one. This one has a bunch of blue bars, so that means neutral, but that is okay. If it's had a good run, then most times stocks need to consolidate for a period. So it's moving sideways in a neutral stance right now. If I look at the regular candles, it looks like that. The volume down here is pretty low. So on this pullback on low volume, that's actually a good thing. That's what you'd like to see. If we look at the PPO crossed above 0 back, it actually did right there and then went sideways and crossed for the last time right there. So that was the signal that the uptrend is probably beginning. And especially when all of these moving average lines cross right here. You can see right here where all of these crossed in July and started moving higher, especially when they all crossed above the 200, and now they are in a bullish configuration. So this is what John Carter calls stacked moving averages. That's what you want to see. You want to see the moving averages, the slower ones at the bottom and the faster ones at the top. You want to see stacked moving averages like that. And when they first start to move above each other, right in this period, which is sometime in July, then that was the signal that it is probably going to move higher. What else? Relative strength. It's right at its peers, so it's basically moving along with its peers. What group is this in? Communication Services Internet. So this is the Internet group, along with Google and Netflix, companies like that. So it's sitting right at 0, right at performance with those. So in general, it looks pretty good, actually. For this one, I would probably put a stop somewhere along this resistance line, right about 7. I'd like to see it, if it comes back down, I'd like to see it bounce at the 21 like it has here. Went through it a little bit there, but it did there. So I'd like to see it bounce there at the 21 at 725. Maybe either put a stop at 7 or add more. Add more when it gets to 7. Not a bad thing to do. So Genie looks pretty interesting. Illumina also looks pretty good. It's had a nice run. It's above all of its moving averages, in particular the 200 and the 50. It's also above the 21, but it may come back. You can see that all the blue bars is one green, but mostly blue, so it's neutral. That means it's consolidating this run. So it's moving sideways. It's above the zero line up here. So it's in an uptrend. If we look at the long-term weekly, you can see that it's been down here at 100 and near that area for quite a while, but it can't seem to go below 100. So that means that's where all the buyers are, down here. This actually probably is about 90. I'm not sure what that number would be down there. So that's 106 close. The low was 90 down here. And the low on this one was 98. So hit 90, hit 98. Now it's at 131. So this is definitely support down here. And it's moving above its moving average line. So it might be poised to try to retake this 200-day. This is a weekly chart. So that's a 200-week moving average. So that's an interesting chart. If I go back and look at it here again, it looks like it's actually trying to make a run. So we'll see how long that lasts. Intel is very interesting. I just actually took a position in Intel on Friday based on this green bar right there. The fact that it has been just bouncing along this 18, 19 area right here. So all of the buyers are sitting down here at this level. They don't want it to go below that. It had an announcement that the board is looking at ways to improve. They didn't say explicitly, but that could mean selling to another company. I don't know if that's the case, but potentially that could be what's happening. It's definitely been underperforming its peers. So the reason that I liked it in this particular case, if we look at the regular candles, you can see right there, it had a nice candle on Friday. We look at the Elder Impulse sitting right at the 21-day moving average. So the 21-day is at 22 and it closed at 22.04. So sitting right there on the 21-day. But the interesting thing to me is that I could put a stop right down here at about 1950. So it's very low risk if it doesn't keep going up and reverses and comes back down. I mean, the worst I think that will happen is it just goes sideways and does nothing. But if that's the case, then I won't wait. I'll stick with it for a couple of weeks. And if it's not moving higher, then I probably will get out. But I think it has a chance to get up here to close this gap up here at 28, 29. So that's what I'm looking at for Intel. JetBlue, what was earnings? 730. So that was back here. So earnings were right here. Looks like it's not great earnings. It's below the 200-day, below the 50-day. It has a lower high and lower low and a lower low. We don't know yet if it's going to make another lower high until it reverses. The candle is a reversing candle. You see right there, that's a shooting star candle. So it opened down here, it traded all the way up to the top, and then it came all the way back down and closed at the exact same place that it opened, almost the exact same place that it opened. The open was 505 and the close was 508. So that shows that after this big drop right here, this is probably short covering into this period. Some people starting to get in because they want to try to catch the bottom. And it's right at the 21-day, a little below it. It can't get through the 50 or the 200. Both of them are right up there. So I would be a little wary of JetBlue right here. Doesn't look to me like it's going to go much higher. This one down here, by the way, is the money flow. So this is a 13-day money flow, the gray one, and the red one is a 65-day money flow, or think of it as a weekly. So the money flow has been negative for quite a while. it's just beginning, the short-term money flow, it's just beginning to start kicking in. So will that be enough to push it up? But it's got a lot of work to do, a lot of resistance up here that it has to get through. So I don't think I would be in JetBlue right here. Just got so many places where it could potentially reverse and go right back down again. So that's not one that I would want to be in. MicroStrategy. All right, so MicroStrategy is interesting. Let's take a look at MicroStrategy in a different way. Let's look at it on the gallery view. And I'm going to do MicroStrategy on the left and Bitcoin on the right. Because MicroStrategy is a Bitcoin company, basically. So what that implies is that as Bitcoin goes, so MicroStrategy will probably go. So the first view up here is the intraday. So this is what happened, each day. This goes back August 12th. So about 2 weeks or so. You can see it had a really nice run. Try to get, oops. Didn't want to do that. Try to get through its 200-day, but couldn't. Actually, this is a 65-minute chart. But you can see how it's following Bitcoin. We go down to the daily view. Again, here's MicroStrategy, here's Bitcoin. So MicroStrategy tried to make a run to get through its previous resistance. It actually did go a little above it, even as Bitcoin didn't. Bitcoin could not get even back to its previous high. So that right there should have been a warning sign for MicroStrategy. Then cross the moving averages right here, still above its 200-day, but you can see how similar it looks to Bitcoin. So you could use MicroStrategy as a proxy for Bitcoin if you wanted to. But as Bitcoin goes, so MicroStrategy will go. And if we look at a weekly view, a longer term view, both of them have had a really nice run since the fourth quarter of last year. So basically most of this year. Had a great run in the beginning of the year, both of them. Now it's come down, sitting right at the 21-week moving average. And both of them have a red candle for last week. So these are weekly bars right here. The momentum indicators are moving lower, but haven't really crossed over to confirm a downtrend yet. So that doesn't mean that this will continue into a downtrend. It just means right now that they're just moving sideways. So that's both MicroStrategy and Bitcoin. Micron is in the semiconductor group. Earnings are on the 25th of September. Just like most semiconductors, it's putting in lower lows, lower highs. Might have a higher high right there, but we don't know. Still has a red bar, so we want to wait for a green bar. Still below the 21-day, still below the 50-day right there. And the MACD is below the 0 line. And if we look at how it's doing versus its peers, again, below 0, much like AMD and most of the other semiconductors. So there's been a big rotation. I talk about this in my newsletter, big rotation out of aggressive sectors and into defensive sectors. So that means out of technology and into staples and things like that. So Micron and most of the semiconductors, while they have the potential to rally, they have to prove themselves. This still has a lot of resistance that it has to get through, in particular at 110, which is also right where the 50-day moving average is going to be. So 110 is the key area for Micron. It needs to get through that to continue higher. NVIDIA, everyone's favorite. NVIDIA has 2 red bars. The moving MACD up here crossed, but the line has not gone below 0, even though the histogram has. The histogram usually leads. So if it's taken the first step below 0, that might mean that this will continue lower. Does not necessarily mean that it will. The momentum down here looks like it was crossing, but then may have turned back around. We'll see. Of course, significantly outperforming its peers. Unlike most of the other semiconductors, NVIDIA, without doubt, is outperforming its peers. And if we look at it on the other relative strength charts, We can see that it's outperforming the S&P. It is underperforming the technology group. Actually, the technology group is underperforming the S&P, I should say. The semiconductors are outperforming technology, and semiconductors are outperforming the S&P. So in general, all of these relative charts look pretty good. The thing that really concerns me about NVIDIA is this rounded top that it's created right here. That usually is a sign that it will continue lower. Doesn't mean it will continue lower, but usually is a sign that it may continue lower. So you can see it's got green. Both trend and momentum are up. It turned to blue. One of the two of those is down while the other one is up, so that's neutral. And then it crossed back over right there. And if we look at it with a regular candle, it's got a spinning top candle, which means it opened. Let me see. The open was 119.53, and the close was 119.37. So it opened and closed at almost the same place, but it traded all the way up to 121 and down to 117. So it traded up, it traded down, and it ended at exactly the same place. That is indecision. That is a perfect visualization of indecision. So the market doesn't know yet which way it wants to go. It's sitting right on the 21 and the 50-day moving averages, and the 5-day, which is the short-term one, is moving down. So this really needs to make a move here soon to confirm which way it's going to go. Right now, it doesn't know which way it wants to go. So I can't tell you which way it's going to go. Could go either way right now. So NVIDIA is kind of stuck in no man's land. Pfizer had a great run, came back down, pulled back. Pfizer at 7:30 was the earnings, so that's right about here. So earnings was on that blue bar, came down right here on this red bar would be the time to get out, or you could wait for the 5 to cross. That's my short-term signal. But anytime I see a red bar like that closing below the 21, I usually want to get out. But right now it's just moving sideways. So again, it's sitting right on all of its moving averages. It's consolidating. See, all the moving average lines are pinching together, squeezing together right there. See how long it's been in a downtrend below the 200-day on all of its moving averages. That is stacked to the negative side. So it's like pinching together and maybe wants to make a breakout right there. So that could be the case. We'll see. Relative strength, it is underperforming its peers. It's underperforming the S&P. So most of these don't look too positive. So there's the 200-day. The 200-day is the last level of support. If it goes down and breaks under that, then it likely will be going back down here to 24, 23, 24 area. So it really needs to get through those moving average lines. Now, the one positive is the accumulation distribution. So even as all of this is happening and the volume down here through the sideways movement has been fairly low, below its average, and the accumulation distribution is starting to move up. So that might imply that Wall Street is accumulating Pfizer, anticipating something that's going to happen soon. We'll see. Next, Palantir. Palantir is also on my my trend models right here. So it will actually give a signal. There's a short-term signal right there. The time to get in, you could have got in a little earlier with the green bar above the 21-day. And you can see that the MACD is above 0. So all of that implies that it is confirming an uptrend. And it is definitely in an uptrend. It's got a green bar on Friday. So that may indicate that it's ready to start to move higher. So Palantir actually looks pretty good right here. This is SPY. That might be all. Is that all of them? Oh, I'm in the wrong one. Okay. Here's Palantir. All right, let's look at the next one. PayPal. PayPal also had a really nice run. So it's sitting up here consolidating, had a great run higher. Went from basically, looks like 51 up to 73. So had a great run right there. It's moving sideways right now. It's starting to cross right here, but this is well above the 0 line. So it is confirming an uptrend. All of these momentum indicators are not, even though they're starting to move lower, they are still well above, they're in bullish territory. So that is very positive for PayPal, actually. But just like any stock that has a run like that is going to consolidate. So the decision that you would have to make is, do I want to take my profits here if I got in down here or even over here? Do I want to take my profits? And it's never bad to take a profit. Or do I want to see if it will pull back maybe to the rising 21s? The rising 21 might make it to 70. It could pull back to 70 like it did right there and maybe add more on PayPal. Don't know. I don't know everybody's style or what they're trying to do, but PayPal actually looks pretty good. If we look at the momentum, it's above all of these. So it went above right there, then dropped back below it, and then finally went above right there. So that was probably August 8th or something. And the MACD moved above right there. So on any of these green bars, even though it pulled back, might have been a good entry, or one of these green bars. But since then, it just continues to go higher, and now it's following its 5-day moving average right on up, which is great. In this case, remember I said the green one here is the exit. So you could use that to set a stop. So a stop would be just below 68, which is also happens to be where the 21-day is. So that's probably a good place to set a stop if you're in this one. Okay, what's next? SMCI just had a terrible run lately. You can see it went below. The MACD went below way back here. It just went sideways through this whole period. It went definitively below way back here in April. So that would have been the time to get out when these moving average lines cross back here. We look at all the moving averages again. These are all stacked to the positive side for SMCI, and then they are slowly squeezing together. And then right here, which is July, they all started to reverse, and now they are stacked to the negative side. So this is absolutely not a good look. This is a definition of a downtrend, and it keeps on hitting new lows down here. So could make it all the way back down here to 300, possibly. If we look at it this way, it's in the red below all of its moving averages. If we look at it on the regular ones, you can see again, it can't get through the 21. It was trying to get above all the moving averages here, but really couldn't do it, and just basically collapsed from back here in July. Now the money flow, short-term money flow is starting to pick up a little bit, and the longer term is moving a little bit higher too. So these low prices on SMCI might be a place where Wall Street traders might be starting to add a little bit. If we look at the relative strength, we can see the accumulation distribution line has just really been going lower. It hit a peak way back here in March, and it just has steadily had distribution all the way through. And even, especially on these down days here, is continuing to distribute. So it doesn't look like people want to be in SMCI right now. SoundHound, not doing much, just going sideways. Got some red bars, some blue bars, red bars. So it's just going sideways, not doing much, sitting right on its moving average lines. It needs to really get above 650 over here to break out. So this is one that if you're thinking of taking a position, I'm not sure that I would want to do that yet. I really want to see it, definitively moving higher. I don't like seeing the short term, the pink line moving below the blue line, which it just did. That might indicate continued downtrend. But because it's, such a low price and it's just moving sideways, you look at it on a weekly chart, you can see right there basically what it's done. So even if it does have a bounce, I'm not sure if this is on my short squeeze list or not. I have to go look at that. But it had a nice bounce right there up to 6. And if it has another bounce right here, it'll probably go back up to 6 and sell off again. But it's not going to have anything great. It might make it back up to 8, but it didn't stay there very long when it got to 8. If we look at it on a daily chart, there it is again. So right up there at 8, but resistance is right at 650, 625. So I would suspect that this will probably, right now it's at 489. This would be a very short-term trade if I were to do anything with this. And I probably wouldn't right now. It doesn't look like it wants to go higher. But if I were like put an order in at $5, then I would put a sell order in at $6. I take my $1 profit and run. That's just me though. Here's TLT. So it's starting to come down and the moving averages are starting to move lower. It is not confirming a downtrend yet, but the momentum indicators are starting to roll over. This is one that I think is going to do well next year, and it probably will do well when the first rate cut occurs. And I think right now a lot of money is moving into financials, and I think as rates come down, I think bonds might do better. But right now I wouldn't get into it. I wouldn't add right now, but if you are in it and want to add some, I'd be looking at the 50-day moving average, which is at about 95 right now. T-Mobile's had a great run. T-Mobile has actually been on the number one top 10. It's been in the top 10 list for a few times. Dropped out a little bit right now, but it looks like it's just going to have a normal pullback. So if you wanted to add, probably the 21-day right there, 195. By the way, this dash line right here is the same as this green momentum indicator. So you can see the green one right here is right at the 21-day moving average. And on my default chart, that's the same line right there. So both of those are right there at 195, roughly. So that's a place to add if you're in it or if you wanted to get into it. T-Mobile actually has been very strong. Western Midstream Partners. So this one is in an extended pullback since July, and it went below, confirming a downtrend right there, went below zero. It went below its 50-day 21. The 5 went below the 21 right there. 21 went below the 50 right there, and they're continuing to go down. You look at the moving average lines, you can see they've been in a stacked configuration for quite a while. So this has been a great run. And right now they're starting to move the opposite direction. So it really needs to bounce and move higher, but it's creating some lower lows and lower highs right now. So again, that's confirming a downtrend. One you probably want to be careful with. It's in the exploration and production space, the energy space. So energy lately has not done real well. So this is one that I probably would not be in right now, although it did give a green bar on Friday, but it's got a lot of work to do. It's got to get through the 50-day moving average. It has to get through this resistance here. If it doesn't get through that, then it's just going to create another lower high and then probably another lower low. So if it can't get through 40, 41 in this area, then it's not going to be a good look for Western Midstream. Wolf, I don't know anything about this one. Terawulf is financial asset managers. Its earnings is 11.11. It had one at 8.12. So 8.12 is right here. So it had earnings right there and didn't really seem to do too much with that. It's also a low price stock. It's momentum indicators went above zero briefly, but it looks like it might go back below zero again. Went below it right here, so that's confirming a downtrend. It's putting in now a lower high. It has a low, and we'll see if it makes another lower low. But I suspect on this one, it's is outperforming its peers, which is good. So on this one, I don't know. It doesn't look too enticing to me. That doesn't mean it's going to continue down. You can see where the stop potentially is at 3.5, 350. But this one has 2 red bars and a blue. Actually, got 2 blues or 2 reds and then another blue. So it needs to get above the 50-day moving average before I think it has any chance of breathing some life. 50-day is at 460 roughly, and right now it's at 436. So that one needs to go higher. I think that was the last one in the list. Yes, it was. The only other thing I want to mention as we're looking at charts is I do a short squeeze alert for members, and I just did one, just sent one out this morning on NVAX right here. So NVAX just got a short squeeze alert right here. It's on the short squeeze list, which means in order to make that list, it has to have more than 20% of its float shorted. And in order to get an alert, it needs to end the day higher than it began. It needs to be higher than the last 5 days. It needs to have better than average, actually 125% better than average volume. And it needs to be moving higher. Now, it is doing all of those things. However, for shorts to start to feel pain, the price has to get above the point where they shorted. And that's the resistance level. So I will usually draw in the resistance lines on these charts to show that, you know, this 14 level right now is at 1238. So it started to move up, and NVAX is notorious for short squeezes. So it might be starting one, but it really needs to get above 14 for these shorts to feel pain. It needs to get above 18 for these shorts over here to feel pain. But you can see what happened. It's actually hit the short squeeze list twice. So it hit it back here in June as well. And I just started that list in June. If I had it going before that, it would have hit the short squeeze list on this candle as well, with all of this volume. So it would have been giving you an alert at about 13, and it went up to 24 right there. So I don't recommend people do short squeezes. They are really meant for very short-term traders and for people that can make adjustments very quickly, because they often will go up and they will come down just as fast. You'll see right here, it went from here to here and right back to here. This one went from here to here and right back to here. So this one right here, who knows, could go up to 18. You know, could get $5 out of it, and it may come right back down again. But this is just something that I send out. It's up to you how you want to trade. But this is just alerting people that this is one that actually had 33% of the float was short back on this one. It now is at 23.5% of the float is short. So a lot of these shorts that were over here have covered already. So it's still above 20%, but not as much as it was back here. All right, that's it for today. Sorry for such a long one, but that's based on everyone's input and wanting me to go through those charts of those stocks. Hope it was helpful. Give me some comments. Let me know what you think. And if you want to continue this sort of thing, maybe we can do that again in the future. All right, that's it for today. Good luck trading this week, and have a great Labor Day, everyone. Great holiday.